Hey there traders, welcome back to another Commitment FX video. Thank you so much for joining me. Today we're going to be looking at a very powerful trading strategy for anyone to get their hands on. It's very simple to understand and is incredibly powerful. So without further ado, let's get straight into this video where I'll be breaking down how you can profit from looking at the commitment of traders data. Let's get going. So we are looking at Euro USD here, and of course we are back testing this. This was a particular trade which I posted over on Commitment FX. If you guys are not aware, check the link down below, head over there now and become a member. If you become a member, we've got a platform where we publish trade ideas without all of the BS that you might find elsewhere. So this was a trade which I published earlier in my platform. And what we're looking at here is a very strong trend for Euro USD. Let's break it down quite quickly. We're on the daily here, of course. So from 2020, we've had this nice big bullish push to the upside where it peaked out at the beginning of January 21. And since there, the market has been moving very aggressively to the downside before currently at the end of the year, of course, we're back testing. It's the end of 2021. We're in this consolidation period. Now, consolidation period is a good point to look at because the market is going to either continue in a direction or it's going to find a point of reversal. The trick is, well, how do we understand whether this is going to continue or going to reverse? And that's the trick which we're going to be looking at today. So point one of our trick is, for anyone out there, is what is the overall market telling you? Let's zoom this out and see what the overall direction of this pair is. So zooming out all the way, what we can see is, well, since beginning of 20, even perhaps down here 2017, the market has been moving relatively to the upside. However, it did fail to make a high. So arguably we are in a downtrend. The overall trend is to the downside. But we need to understand also what the midterm trend is. Long-term trend is perhaps to the downside. But this midterm trend here suggests that the market is finding a moment of pause. Looking to the left, it is almost mirrored the point in the market back in 2020 where the market continued back to the upside. So these are good signs which we're looking for. It's an area of interest where we've had previous support in the market which has continued price upwards. And again, currently in the market, we're in this consolidation period where the market is failing to break below. These are good signs that we're going to be looking for a buy order. But the key aspect to this trade is, what are banks and institutions doing with their money? How do we find that out? We head over to Commitment of Traders Club and we go over to the COT reports. We're trading Euro USD, so we go down onto Euro and we are currently looking in and around the 26th-ish of January. So going down to the 26th of January, so we have here the 25th of January. And what we can see here is overall, the banks and institutions have gone from having minus 23k net positions to the short side. So for those of you that don't know, the banks have got more of their assets aimed at shorting Euro USD. Again, these are compared to the US dollar. But over the past few months, we can see here that the banks have been closing out very aggressively their short positions and opening long orders. So they've been adding long orders to their portfolio and closing out short orders. So much so that we've broken into net long, and now at the 26th of January we are plus 31,500 to the upside. So the market is going to push to the upside. For those of you that are still unsure, see it as this. This is what the banks are doing with the market. If they are adding long orders and closing short orders, they're shifting from a bearish market to a bullish market. So we know with this powerful data that the banks are looking to make this pair continue to the upside. They're no longer interested in shorting. They've closed all their shorts out and they are adding longs to their positions. So how does this translate onto the chart? Well, this consolidation period is exactly that. They've been closing out their short orders for several weeks, in which case the market hasn't been able to break below the previous low. So what we need to do now is find our point of entry. We know the market is going to continue to the upside for two reasons already. Number one, we're at a previous looking left area of interest in the market where there's been support previously. We know there's an area of interest here. And secondly, the banks and institutions are shifting their positions from net short to net long relatively aggressively. We can see that they've added lots of longs and closed out all their short orders. They're not interested in shorting this pair any longer. So how do we then enter the market? Well, what we do is we draw our area of interest. So the final bit that we need to do is put in our entry. So what we'll do is we'll grab our entry tool and we'll put our entry down where the reasonable person would put their entry. And first of all, we're going to be looking to target this high as our initial point, and we are still in this trade currently as I'm speaking now, and our target is way up here. So let's see how we are getting on. Of course, I know the outcome. I'm in this trade already, but majority of people will put their stops perhaps just below the previous low. But what the banks and institutions are going to be doing before they enter into this trade is they're going to want to grab the final bit of liquidity from us retail traders. For those retail traders that are still short in this pair, they're going to lose out when the market pushes to the upside. And for those retail traders who are looking to long this pair, they're going to be stop hunted out. So what we want to do is we want to put our entry where the masses put their stops. So we're going to drag our stop loss down to where our entry, to where the masses would put their stops. So something around here. This then allows us to have a very tight stop loss. We're going to look at this on the 4 hour. We're going to have a very, very tight stop loss. Something which will look like this. So you can see we've got a 1 to 20 trade already. Can even go in on the 1 hour if we like. And we're going to be targeting initially as our first target the high up here, because we want to see if the market is going to break. And already if we target this high, we're going to be looking at 300 pips. So we're in this for the long run. Again, we're looking at this on the 4 hour chart. So let's see if we can get a 300 pip move from a very tight stop loss, whereby we're only risking 47 pips from a swing trade. So let's see if the market plays out and tags us in. Okay, so we have been tagged in. We are sitting in drawdown. Not to worry. We are confident in our strategy. Very close to stopping us out. But again, we have enough stop loss to allow for this particular move. And here we go. Now we're starting to see the profit come through. We've found the bottom where most retail traders would have been stop hunted out. And now the banks and institutions are going to continue their long orders. We've had this big bearish push to the downside. It's come to a very aggressive finish. And now I've had a very aggressive push to the upside. You can see this by the large wicks showing the buying pressure coming into the market. So initially we're going to be targeting our high up here. And we're going to see how we get on as well going forward. So we're in the market. Let's see if we can hit our initial target. There we go, traders. There is our initial target hit. That's not far away from where we are currently in the market. There we go. This is where we are sitting currently. We've hit our target number 1, which is fantastic. So from this relatively straightforward move, we've made a total of 302 pips, and our overall target is way up at the top for an almost 1 to 20 risk to reward. 1 to 18 risk to reward is what we've got in at the moment. So traders, what you can see here is very, very simple. We've understood the overall trend direction, which is in the long term short, but overall the market has been making a series of highs looking for the long. Zooming further back out, we identified the area where the market had respected previously, which was over here, which caused this big push to the upside. We've identified the market is at that same area again and anticipate the same thing happening. Secondly, we identified what the banks are doing. This is the most important aspect. We'd seen that the banks have shifted their orders from selling to buying Euro USD at and around this area, and we were patient enough and understood that the banks need that final liquidity to stop the retail traders out, take their money and continue this to the upside. So we accounted for that by putting our entry where the masses put their stops. Although it got very close, we were still in this market, as you can see from the daily, and we reached our take profit 1. We've still got a long way to go in my personal trade, but we are certainly on our way. In any event, traders, I really hope this was a useful video for you. Please take away the power of the Commitment of Traders data. If you're not a member of the Commitment of Traders Club, do head over to our website, become a member, get access to the clearest data out there, my weekly analysis of the data, and our weekly Forex review for trades coming up. We'll see you guys in the next video, and thank you for joining me as always.